Hello, my dear students. A very warm welcome to all of you in Shri Jayendra Rank Zone. I am your friend and mentor for the subject Principles and Practices of Accounting. In this lecture, we'll begin with Accounting, Chapter 10, Unit 3. This is Chapter 10, Company Accounts, and we'll begin with Unit 3, that is Issue of Debentures. Learning Outcomes. After studying this unit, you will be able to understand the meaning and the basic purpose for raising debentures by the company. Differentiate between shares and debenture of a company. Understand various types of debentures. Pass entries for issue of debentures, debentures payable in installments. Make entries for issue of debentures considering the conditions of redemption. Pass entries for issue of debentures as collateral security. Pass entries for debenture issued for consideration other than cash. Write off discount on issue of debentures. Calculate interest on debentures. Overview of the unit. Types of debentures. The basis of security, we have secured debenture, unsecured debenture. On the basis of convertibility, we have convertible debenture, non-convertible debenture. On the basis of permanence, we have redeemable debenture, irredeemable debenture. On the basis of negotiability, we have registered debenture, bearer debenture. On the basis of priority, we have first mortgage debenture, second mortgage debentures. Introduction. In the earlier units of this chapter, we have studied the issue of shares capital as a means of raising fund for financing the business activities, but with increasing and ever growing needs of the corporate expansion and growth, equity source of financing is not sufficient. Hence, corporate turn to debt financing through various means, issuing debt installments by offering the same for public subscription is one of the sources of financing the business activities. Debt financing does not only help in reducing the cost of capital, but also helps in designing appropriate capital structure of the company. Debenture is one of the most commonly used debt instrument issued by the company to raise funds for the business. Meaning, the most common method of supplementing the capital available to a company is to issue debentures which may either be simple or naked, carrying no charge on assets, or mortgage debenture carrying either a fixed or a floating charge on some or all of the assets of the company. A debenture is a bond issued by a company under its seal, acknowledging a debt and containing provisions as regards repayment of the principal and interest. If a charge has been created on any or on the entire assets of the company, the nature of the charge and the assets charged are described therein. Since the charge is not valid unless registered with the registrar and the certificate registering the charge is printed on the bond, it is also customary to create trusteeship in favor of one or more persons in case of mortgage debenture. The trustees of debenture holder have all powers of the mortgage of property and can act in whatever way they think necessary to safeguard the interest of debenture holders. Section 2, subsection 30 of the Companies Act 2013 define debenture as debenture includes debenture stock, bonds or any other instrument of the company evidencing a debt whether constituting a charge on the assets of the company or not. Thus, it is clear from the definition that debenture may be secured debenture or unsecured debenture. Note, no company shall issue any debenture carrying on any voting rights. Debenture do not contain voting rights. Features of debentures. It is a document which evidences a loan made to a company. It is a fixed interest bearing security where interest falls due to specific dates. Interest is payable at a predetermined fixed rate regardless of the level of profit. The original sum is repaid at a specified future date or it is converted into shares or other debentures. It may or may not create a charge on the assets of the company as security. It can generally be bought or sold through the stock exchange at a price above or below its face value. Distinction between debentures and shares. Debentures and shares. Debentures. Debenture holder are the creditor of the company. Shareholder are the owners of the company. Debenture holders have no voting right and consequently do not pose any threat to the existing control of the company. Shareholders have voting rights and consequently control the total affairs of the company. Debenture interest is paid at a predetermined fixed rate. It is payable whether there is any profit or loss. Debenture rank ahead of all types of shares for payment of the interest due on firm. Debenture on equity share is paid at a variable rate which is vastly affected by the profits of the company. However, dividend on preference shares is paid on a fixed rate. Debenture on interest are the charges against profits and they are deductible as an expense in determining taxable profits of the company. Dividends are a portion of profit, appropriation of profit, and these are not deductible in determining taxable profits of the company. There are different kinds of debenture such as secured debenture, unsecured debenture, redeemable debenture, irredeemable debenture, registered debenture, bearer debenture, convertible debenture, non-convertible debenture. There are only two kinds of share: equity shares and preference shares. In the company's balance sheet, debentures are shown under long-term borrowings. In the company's balance sheet, shares are shown under shareholders fund. Details in share capital of notes to accounts. Debenture holders can be converted into other debentures or shares as per the terms of issue of debentures. Shares cannot be converted into other shares in any circumstances. Debentures cannot be forfeited for non-payment of call monies. Shares can be forfeited for non-payment of allotment and call monies. At maturity, debenture holders get back their money as per the terms and conditions of the redemption. Equity shareholders cannot get back their money before liquidation of the company. However, preference shareholders can get back the monies before liquidation. At the time of liquidation, debenture holders are paid off before the shareholders. At the time of liquidation, shareholders are paid at last after paying debenture holders, trade payables, etc. Types of debentures. The following are the types of debentures issued by a company. They can be classified on the basis of security, convertibility, permanence, negotiability and priority. On the basis of security, secured debenture. These debentures are secured by a charge upon some or all assets of the company. There are two types of charges: fixed charge, floating charge. A fixed charge is a mortgage on specific assets. These assets cannot be sold without the consent of the debenture holders. The sale proceeds of the assets are utilized first before repaying debenture holders. A floating charge generally covers all the assets of the company including future one. Unsecured or naked debentures. These debentures are not secured by any charge upon any asset. A company merely promises to pay interest on due dates and to repay the amount due on maturity date. These types of debentures are very risky from the viewpoint of investors. On the basis of convertibility, convertible debentures. These are debentures which will be converted into equity shares either at par or premium or discount after a certain period of time from the date of issue. These debentures may be fully or partly convertible. In future, these debenture holders get a chance to become the shareholders of the company. Non-convertible debentures. These are debentures which cannot be converted into shares in future. As per the terms of the issue, these debentures are repaid. On the basis of permanence, redeemable debenture. These debentures are repayable as per the terms of the issue. For example, after 8 years from the date of issue, it could be redeemed. Irredeemable debentures. These debentures are not repayable during the lifetime of the company. These are also called perpetual debentures. These are paid only at the time of liquidation. On the basis of negotiability, registered debenture. These debentures are payable to a registered holder whose name, address, particulars of holding is recorded in the registrar of debenture holders. They are not easily transferable. The provisions of the Companies Act 2013 are to be complied with for effecting transfer of these debentures. Debentures interest is paid either to the order of registered holder as expressed in the warrant issued by the company or the bearer of interest coupons. Bearer debenture. These debentures are transferred by delivery. These are negotiable instruments payable to the bearer. No kind of record is kept by the company in respect of holders of such debenture. Therefore, the interest on it is paid to the holders irrespective of any identity. No transfer deed is required for transfer of such debentures. On the basis of priority, first mortgage debenture. These debentures are payable first out of the property charged. Second mortgage debentures. These debentures are payable after satisfying the first mortgage debentures. Issue of debentures. Accounting entries for issue of redeemable debentures. First, the issue of redeemable debentures can be categorized into the following: debentures issued at par and redeemable at par or at a discount. Debentures issued at discount and redeemable at par or at a discount. Debenture issued at premium, redeemable at par or at a discount. Debenture issued at par, redeemable at premium. Debenture issued at a discount, redeemable at premium. Debenture issued at premium, redeemable at premium. Note: redemption at a discount may be a rare circumstance in practical life. Journal entries in each of the above cases are discussed below. Debentures issued at par, redeemable at par. When debentures are issued at par, the issue price is equal to the par value. In this regard, the following entries is recorded. For receipt of application money, bank account debited to debenture application. For transfer of application money to debenture account, debenture application account debit to debenture account. Illustration 1. Illustration 1. Amul Limited issues 4 lakh, 40 lakh 9% debentures of 50 each, payable on application as per the terms mentioned in the prospectus, and redeemable at par at any time after 3 years. Of the date of issue, record necessary entries for issue of debentures in the books of Amol Limited. Solution. Solution. Books of Amol Limited. Journal. Bank account debited to debenture application account. Bank account debited to debenture application account with the debenture money 40 lakh debenture of 50 each. Debenture application debit to 9% debenture account. 9% is coupon rate. I believe you understood. Let us move ahead. Illustration 2. Before moving to illustration 2, just write point over here. Debenture issued at discount. Debenture issued at discount and redeemable at par or at discount. When debentures are issued at discount, issue price will be less than par value. The difference between The difference between the two is considered as loss on issue of debentures and is to be written off over the life of debentures over the life of debentures. The entries with regards to issue are as follows. For receipt of application money, bank account debited to debenture application account at the time of making allotment debenture application account debited, discount on issue of debenture debit to debentures account Let us move ahead. Illustration 2. Atul Limited issued 1 crore 8% debentures of 100 each at a discount of 10%, redeemable at par at the end of 10 years. Money was repayable at follows: 30 on application, 60 on allotment. Record necessary journal entries regarding issue of debentures. Solution. Books of Atul Limited, journal. Books of Atul Limited, journal. Bank account debited to debenture application account 1 crore debenture into 30. Debenture application account debit. Debenture application account debited to 8% debentures. debenture allotment, debit, discount on issue of debenture debit to 8% debentures 60 on allotment, that means 10 is the discount, so debenture allotment 60, bank to debenture allotment, bank to debenture allotment. Let us move ahead. Debentures issued at premium and redeemable at par or at discount. When debentures are issued at premium, the issue price is more than par value. The premium is transferred to securities premium account. In this regard, the following entries are recorded. When premium amount is received at the time of application, for the receipt of application money, bank to debenture application, for transfer of application money at the time of allotment, debenture application debit to debentures to securities premium. When the debentures are issued at par or premium value but redeemable at discount, then it means that the company will gain by paying less. The gain will not be recognized in the books at the time of issue of debentures as per the conservatism concept. I believe you understood. Illustration 3. Koinal Chemicals Limited issued 15 lakh 10% debentures of 50 each at a premium of 10%, so 55, payable as 20 on application, balance on allotment. 20 on application and balance of allotment. Debentures are redeemable at par after 6 years. All the money due on allotment was called up and received. Record necessary entries when premium money is included in application money. This simply means on application, this 20 on application means this is 15 plus 5. 15 plus 5. Solution. Bank account debit to debenture application account to debenture application. Fifteen lakhs multiplied by 20. 3 crores. Next, debenture application debit to 10% debentures to 10% debentures to securities premium to securities premium account. Fifteen lakh multiplied by 5, so it would be 75 lakhs over here and 225 over here. debenture allotment debit to 10% debentures bank account debit to debenture allotment account. I believe you understood till here. Let us continue. Debentures issued at par and redeemable at a premium. Where debentures are to be redeemed at a premium, an extra entry is to be made at the time of issue and allotment of debentures. The extra entry is to be passed for providing premium payable on redemption. Debenture redemption premium account is a personal account which represents a liability of the company in respect of premium payable and redemption. In this case, the issue price is same as par value, but the redemption value is more than the par value. Therefore, redemption premium is recorded as a loss on issue of debentures at the time of allotment of debentures. Following journal entries are recorded in this regard. For receipt of application money, bank to debenture application, at the time of making the allotment, transfer of application money to debenture account, debenture application account debited to debentures, call made subsequent upon allotment, debenture allotment account, loss on issue of debentures to debentures, and this loss is actually debenture redemption premium. Students can note that instead of passing the separate entries, a compound entry could be passed as bank account debit, loss on issue of debenture account debit to debentures account to debenture redemption premium account. Illustration 4. Modern equipment. Modern equipment is issued 4,12% debentures of 100 payable as follows. On application 30, on allotment 70, the debenture were fully subscribed and all the money was duly received. As per the terms of the issue, debentures are redeemable at 110 per debentures, that is at premium. Redeemable at premium. Record necessary entry regarding issue of debentures. Solution. Books of modern equipment. Books of Modern Equipments Limited. Journal. Bank account debited to 12% debenture application. 12% debenture application. 4 lakh multiplied by 30. One crore 20 lakhs. %12 debenture application to 12% debentures, 12% debenture allotment to 12% debentures, a premium of rupee 10 per debenture needs to be given. So 2 debenture redemption premium 4 lakhs multiplied by 10, 40 lakhs, and this would be the loss on issue of debentures, 40 lakhs, 280 lakhs. Next entry, bank account debit to debenture allotment account. Bank account debit to debenture allotment account, 280 lakhs. I believe you understood. I believe you understood this. Let us move ahead. Debenture issued at discount and redeemable at premium. In this situation, the issue price is less than the par value, but redemption value is more than the par value. Issue price is less than the par value, but redemption value is more than the par value. The difference between the redemption price and the issue price is treated at discount on issue of debenture. Suppose 10% debenture of 1000 is issued at a discount of rupee 100 and redeemable at a premium of rupee 5 per debenture. The amount of loss will be equal to 1005 minus 900, that is 105. This is to be treated as a loss on issue. It is to be noted that premium on redemption of debenture is also credited by rupees 5. For the receipt of application money, bank to debenture application. At the time of making allotment, transfer of application money to debenture allotment, debenture application account debited to debentures, call made subsequent upon allotment of debentures at discount and redeemable at premium, debenture allotment account debit, discount loss on issue of debenture account debit to debentures. For receipt of call made on allotment, bank to debenture allotment, students can note that instead of passing a separate entries, a compound entry could be passed: bank account debit, loss on issue of debenture account, that is discount debit to debentures to redemption of debenture premium. I believe you understood. Illustration 5. Illustration 5. Agrotech Limited issued 150 lakh 9% debentures of 100 each at a discount of 6%. That means they issued at 94, redeemable at a premium of 5%, redeemed at 105. So they, at the time of redemption, they paid 5 rupees extra. This 5 is a loss, and at the time of issue they issued at discount, so loss of 6. 6 plus 5, 11 rupees loss. After 3 years, payable is 50 on application, 44 on allotment. Record the necessary entries for issue of debentures. Solution. Application, it is 50. Solution. Books of Agrotech Limited, journal. Bank account debited to debenture application. Bank account debited to debenture application. $150 into 50, 7500. Debenture application. Debenture application debit to 9% debentures, 7500. So this was application. Debenture allotment. Debenture allotment debit 6600. Loss on issue of debentures debit to 9% debenture, 7500, to debenture redemption premium. Debenture redemption premium. Premium is 5, so 150 multiplied by 5, 750. 150 multiplied by 5, that is 750. Over here, loss of 11 rupees needs to be calculated. So 150 multiplied by 11, 1650. 1650. I believe you understood. Next entry, bank account debit to debenture allotment. Bank account debit to debenture allotment, 6600. I believe you understood. Let us move ahead. Debenture issued at a premium and redeemable at a premium. In this situation, the issue price is more than the par value and also redemption value is more than par value. The premium received at the time of issue of debentures is credited to securities premium account, and premium paid at the time of redemption is a loss to be provided at the time of issue of debentures. Suppose 10% debenture of 1000 is issued at a premium of rupee 100 and redeemable at a premium of rupee 50 per debenture. In a given case, rupee 100 is to be credited to securities premium account and 50 will be the loss to be provided at the time of issue of debentures. It is to be noted that premium on redemption of debenture is credited by rupee 50. For the receipt of application money, bank account debited to debenture application. At the time of making allotment, transfer of application money to debenture account, debenture application to debentures, call made subsequent upon allotment of debenture at a premium and redeemable at premium, debenture allotment account debit, loss on issue of debenture debit, that is amount equal to premium on redemption to debentures to securities premium to premium on redemption of debentures account. Students can note that instead of passing separate entries, compound entry could be passed. Bank account debit Loss on issue of debentures account debit. 2. Debentures to securities premium. To premium on redemption of debentures account. I believe you understood. Let us move ahead. Accounting for issue of debentures payable in installments. Just like shares, money payable on debenture may be paid either in full with application or by installments. Accounting entries will differ to some extent in either case. Debentures payable in full on application. Where the amount due on debentures are payable in full on application, it is usual to open a separate debenture application account for each class of debentures, such as 10% debenture application account or 12% debenture application account. These accounts record monies received from the applications of debenture. If an issue of oversubscribed, these accounts can be used to record the refund of monies to the unsuccessful applicants. At the time of allotment of debentures, the amount of debenture application account is transferred to the respective debenture account. As discussed above, debenture may be issued at par, premium, or discount. Debenture issued at par. The debenture which are issued at par are issued at the same price as the nominal value. That is, if a debenture with a nominal value of rupee 100 is issued at par, the company receives rupee 100. The accounting entries would be as follows. When cash is received, bank account debit to debenture application account. When excess money is refunded or adjusted for the future calls, debenture application account to bank account to debenture allotment account. When the debenture is allotted, debenture application account to debenture account. When allotment money is being called, debenture allotment account debit to debenture account. On allotment money being received, bank account to debenture allotment account. On debenture call money being called, debenture calls to debenture account. On debenture call money being called, bank account to debenture call account. I believe you understood. Let us move ahead. Illustration 6. Simpsons Limited issued 1,12% debentures of 100 each at par payable in full on application by 1st April. Application were received for 1,10,000 debentures. Debenture were allotted on 7th April, excess money refunded on the same date. You are required to pass necessary journal entries, including cash transactions in the books of the company. Solution. In the books of Simmons Limited, date, particulars, debit, credit. Date, particulars, debit rupee, credit rupee. On April 1, the entry would be bank account debited to 12% debenture application, bank account debited to 12% debenture application account. 11,000. 1 crore 10 lakhs. 1 crore 10 lakhs. 1,10,000 multiplied by 100. Next entry is on April 7. 12% debenture application. 12% debenture application account debit to bank account. 12% debenture application account debit to bank account. Refunded 10,000 debentures, that is excess money received, into 100. This is 10 lakhs. Next is April 7. 12% debenture application account. 12% debenture application account to 12% debentures to 12% debenture. 1 lakh debenture into 100 each. One crore. Let's move ahead. Debenture issued at a premium. A company issues debenture at a premium when the market rate of interest is lower than the debenture interest rate. The debenture which are issued at a premium are issued at a higher price than their nominal value. That is, if a debenture with the nominal value of rupee 100 issued at 10% premium, the company receives 110, where the investor gets slightly less interest than state in the debenture. For example, 12% debenture of 100 issued at a premium of 10%, the investor will get rupee 12 per annum for the investment of 110. Therefore, the effective rate of interest on debentures is 12 divided by 110 multiplied by 100, which is 10.91%. The premium on debenture is credited to securities premium account, as debentures are covered in the definition of securities specified in clause H of section 2 of Securities Contract Regulation Act. Therefore, restriction of utilization of debenture securities premium will also be governed by section 52 of the Companies Act 2013. The accounting entries would be as follows. A. When cash is received, bank account debited to debenture application account. When excess money is refunded, debenture application account to bank account. When the debentures are allotted, debenture application account to debentures account to securities premium account. I believe you understood. Debenture issued at a discount. The Companies Act does not impose any restrictions on the price of which debentures can be issued. Unlike shares, there is no limit of discount on issue of debentures. This is why it is very important for debentures to be issued at a discount. The debentures which is issued at a discount are issued at a lower price than nominal value. If the debentures with the nominal value is 100 issued at 10% discount, the company receives rupee 90 only. The issue of debentures at a discount slightly increase the true rate of interest payable. For example, 12% debentures of rupee 100 issued at a discount of 10%, the company will have to pay 12 rupees for a loan of 90. Therefore, the true rate of interest is not 10%, it is 12 divided by 90 multiplied by 100, which is 13.33%. It is not 12%, it is 13.33%. The company issues debenture at a discount when the market rate of the interest is higher than the debenture interest rate. Like shares, debenture account is credited with the nominal value. The difference between the nominal value of debentures and cash received is transferred to discount on issue of debentures account. In the subsequent years, discount on issue of debentures is written off proportionately by charging to the statement of profit and loss account. It is considered a normal practice to amortize discount on issue of debentures over a period of benefit. Normally it is 3 to 5 years. The accounting entries would be as follows. When cash is received, bank account will be debited and debenture application account will be credited. When excess money is refunded, debenture application account is debited and bank account is credited. When the debentures are allotted, debenture application account debit, discount on issue of debentures account debit to debentures account. In fact, the discount on issue of debenture is considered as incremental interest expense. The true expense, that is net borrowing cost, for a particular accounting period is therefore the total interest payment plus the discount written off. I believe you understood. I believe you understood till here. Illustration 7. X Limited issued 1,12% debentures of 100 each at a discount of 10% payable in full on application by 31st May 2017. Issued at a discount of 10% payable in full on application by 31st May 2017. Application were received for 1,20,000 debentures. Debentures were allotted on 9th June. Excess monies were refunded on the same date. Pass necessary journal entries and show ledger accounts. Solution. In the books of X Limited, journal entries. Date, particulars, debit, credit. Date, particulars, debit, credit. May 31, bank account debited to 12% debenture application, 1,20,000 debenture into 90 each. 1 crore 8 lakhs. On June 9, 12% debenture application debit to bank account extra 20,000 refunded, 20,000 multiplied by 90, 18 lakhs. June 9, 12% debenture application to 12% debentures. 12% debenture application to 12% debentures. 9 lakhs to debenture, it is 1 crore. Over here it is 90 lakhs, and 10 lakhs is discount on issue of debentures. Discount on issue of debentures. I believe you understood. You understood till here. Let us make ledger accounts. First account is bank account. Date particulars amount. Date particulars amount. To debenture application. Over here by 12% debenture application. By balance carried down 90 lakhs. 12% debenture account. Date particulars amount. Date particulars amount. By 12% debenture application. By discount on issue of debentures, 2 balance carried down, 12% debenture application account, to bank account, to 12% debentures, by bank account, discount on issue of debenture account, to 12% debenture, by balance carried down, 10 lakhs. I believe you understood till here. I believe you understood till here. Let us see what we have learnt in today's class. So we have seen the meaning and basic purpose of raising debentures, difference between share and debentures, types of debentures we have completed, learnt the passing entries of issue of debentures, payable in installment, entries for issue of debentures, considering the condition of redemption, the entries we have learnt about the issue of debentures as collateral security. Okay, so we have done till here. We'll be continuing from here in the next class. We'll continue from here in the next class. Thank you.